Today, we're going to dive into a crucial topic that impacts the entire cryptocurrency ecosystem: Tether, also known as USDT. Specifically, we'll discuss its role in the market, its risks, and what the future might hold for this ubiquitous stablecoin. Tether, or USDT, is the most widely used stablecoin in the cryptocurrency world. A stablecoin is a digital currency designed to maintain a stable value relative to a fiat currency, like the US dollar. USDT aims to be pegged 1.1 to the US dollar, making it an essential tool for traders and investors who want to avoid volatility while staying in the cryptocurrency space. USDT serves as a bridge between traditional finance and the crypto world. It acts as the dollar of the crypto ecosystem, with most cryptocurrency exchanges offering USDT as a base trading pair. This stablecoin provides liquidity and enables seamless transactions in the crypto markets, acting as a safe haven during times of volatility. One of the critical elements of USDT's operation is its issuance mechanism. Unlike other stablecoins, USDT does not always require an equivalent reserve to issue new tokens. The Tether company has the ability to mint new USDT tokens at will, without the same level of regulatory oversight that a traditional currency or bank would face. This gives Tether immense flexibility, but also introduces significant risks. The company behind Tether has often been criticized for its lack of transparency regarding the reserves backing the tokens, which leads to concerns about the true value of USDT. Now, let's explore why USDT poses risks to the broader financial system and cryptocurrency market. Lack of transparency. Tether's reserves have been a point of contention. While Tether claims that each USDT is backed by assets, the specifics of those assets are not always clear. This lack of transparency fuels skepticism and can potentially undermine trust in the stablecoin. Potential for hyperinflation. Since USDT can be minted at will, there is a risk of the supply increasing too rapidly, leading to inflation of the token and a loss of the 1.1 peg to the US dollar. If Tether issues too many tokens, the value could deviate significantly from the dollar, creating instability in the market. Systemic risk. USDT is deeply embedded in the cryptocurrency ecosystem. If something were to disrupt USDT's value or cause it to break its peg, it could send shockwaves throughout the entire market. Since many cryptocurrencies are traded in pairs with USDT, this disruption could trigger widespread panic and lead to a cascade of market crashes. There are several scenarios in which USDT could collapse, causing massive disruptions in the market. Regulatory crackdown. Governments, particularly the US, have shown increasing interest in regulating stablecoins. If the US government were to crack down on Tether due to lack of transparency or non-compliance with financial regulations, the trust in USDT could evaporate, leading to a collapse in its value. Market-driven bank run. A bank run scenario could occur if holders of USDT suddenly lose confidence in its backing and rush to redeem their tokens for real dollars. This sudden demand could result in USDT's value dropping below its intended peg, causing panic and forcing exchanges to halt withdrawals. Exposure of weak reserves. If it were revealed that Tether's reserves are not as robust or diversified as claimed, and if they include high-risk or illiquid assets, it could trigger a loss of confidence, causing USDT to depeg from the dollar and collapse. If USDT were to collapse, the repercussions would be far-reaching. Immediate impact on price. Cryptocurrencies like Bitcoin and Ethereum would likely experience sharp drops in price. USDT is the most widely traded pairing for many assets, so any disruption would directly affect the liquidity and price stability of these tokens. Market panic and devaluation. Altcoins, particularly smaller, less liquid ones, would face massive sell-offs as traders flee to safer assets. We could see prices crash and a widespread loss of market value, creating an environment of fear and uncertainty. Global financial consequences. A collapse of USDT could have broader economic impacts. With billions of dollars in play, a failure of Tether could cause panic across both the cryptocurrency and traditional financial markets, leading to a crisis in digital asset markets. Despite its risks, USDT's position in the cryptocurrency market is likely to continue for the foreseeable future. However, Tether will face increasing regulatory scrutiny as governments around the world seek to regulate stablecoins. The future of USDT depends largely on the following factors: regulation and compliance. Tether will need to comply with stricter regulations to maintain its status as a global stablecoin. The pressure from regulators could force Tether to either change its operations or face market rejection. Competition from other stablecoins. USDC, issued by Circle, has become a direct competitor to USDT. USDC is fully backed by US dollars and has clear regulatory compliance. If USDT fails to meet global standards, it could lose its dominance to more transparent and regulated stablecoins like USDC. Market adaptation. The crypto community may start to rely more on decentralized stablecoins or government-backed digital currencies, especially as USDT's risks become more apparent. These alternatives could be more secure and transparent, offering a safer option for users. In conclusion, while USDT has played a pivotal role in shaping the crypto market, its inherent risks cannot be ignored. The potential for regulatory action, coupled with concerns over its transparency and reserve management, poses significant challenges. As investors and users of the cryptocurrency ecosystem, it's important to remain vigilant about the risks associated with USDT and to consider alternatives like USDC or decentralized stablecoins.